All right, here I am with my buddy and fellow poker player, Brandon. We've played Omaha together for a long time. He said I could record this as long as I didn't mind, him eating in the middle because he's a busy guy and got lots of stuff going on. So he told me I had about an hour to kind of give him the abbreviated version of some of my favorite trades every Monday, Wednesday, and Friday. And so I figured we'd go through some of them, but I kind of wanted to start by asking you, if you don't mind this kind of question, give me kind of a range of an account size that you're trying to trade, and then I'll tell you whether or not or how many contracts maybe you could trade in this, if at all. So do you have an idea of, and maybe it's not, you could kind of give me an answer like currently and in the future, you might do this range of account. Any estimate on what that might look like?
Yeah. So, because I'm fairly new to all of this, right?
Right.
So, and then the minimum so that you don't have to fall under the trading deadlines, I just open up an account with 25,000.
Okay.
So, and that way I can kind of play around with it and see if I wanted to do day trading or other things, right? But I
Right.
really want to do, add the options to my strategy. And then later on, I mean, if it works out, I can add another 25, maybe another 50 or something like that.
Okay, so I was kind of trying to get an idea because I wanted to give examples in at least a range of what either you might be at or what at some point you might get to. So it's kind of representative. Let's see, an account size of 25,000. I think you could do two of these trades, one contract a piece, and take about 8,500 in buying power. So I think we could demonstrate about 3 contracts on a $25,000 account, and like a $50,000 account, we could probably demonstrate 5 contracts. And so maybe in my demonstration, I just go ahead and do a demo at a $50,000 account size, so we can kind of see it. All right, so that kind of gives me an idea. So to kind of give you an idea, I think, of course, I'm doing some other things, but in some of my account sizes that are 25,000, I might leave about 8 to 10,000 for this strategy and just trade one contract. With some of the accounts that are $100,000 or more, I might be trading 5 accounts. For accounts that might be in between 300 to 500,000, I might trade 10 contracts. And for accounts that are, closer to $1 million, I might trade as many as 30 contracts. And this is every Monday, Wednesday, and Friday. Now, what I'll also be demonstrating is there's kind of 2 types of strategies. There's one where you use a stop loss. And I recommend using stop losses probably until you get to, you could do them on a smaller account size, but you also take the risk that you couldn't recover from a roll with a smaller account size. So what I want you to be able to do is always live to play another day, right? I guess if a person had a good job and they were able to refill it with some at some point, you might, for every gimme, there's a gotcha. And some of your gimmies are extra returns, but you also take the potential risk of an account that it gets blown up and you're not able to recover from. If I was a young guy and I had a good job and I've got things coming in, I'd be willing to take extra risk than if I would, you're gambling Gary and you're retired and you don't have any extra money coming in and your nuts got to be basically what you live on for the next 30 years, right? So it kind of gives you some ideas. So let me just start, let's assume, and probably the best thing for me to do is just to do this and go back in time and do this on demand in Thinkorswim, and I'll just show you these trades almost like it's happening in real time. Now, I know that January 4th, there were some weird things that happened. So let me just start January 6th of this year. And I'm going to go ahead and share my screen now. And as we go, I don't know, are you a kind of a learner that learns by being told, or do you learn by doing, or do you learn by being shown, or all of the above?
Yeah, I mean, I'm more of a, because I use this platform.
Yeah.
So as long as I watch you doing what you're doing, that's pretty much what I need.
Right.
Because I know how, you know what I mean? I've played around with it so much that I'm very familiar with it.
Right. Let's look here, the account info. I'm not sure why. All right, let's take this to, all right, its automatic default is 100,000. So let me just demonstrate it with 100,000. And you may
can change it to 50.
You can?
Mm-hmm.
You know how you
go to monitor.
Okay.
And then over here on your overall, on the right, bottom right.
Okay.
Go down. Yeah. Right click on that. Like on the available dollars. You see where you got all the green marks?
Yeah.
There's available dollars. Yeah, right click on that and see what it does.
Okay, doing that.
Go there. No, go to the words. Right click. I mean, yeah, it'd be a right click.
Yeah, it's maybe it's because I've got this privacy setting on. That's probably what it is. Even though I'm day trading, I had the privacy setting on. So if I right click on available dollars, it's not doing anything. So here's where you reset it, like reset account.
Yeah, that's where you can reset, but you can change it. I remember I've done it on my, because I wanted to trade an accurate account.
Yeah.
There's a way to do it. I know it's on this screen somewhere.
Well, let me just I'll trade 5 accounts, 5 contracts, but we'll go ahead and reset it for like 100,000. So it is January 6th, and January 6th was a Wednesday. So every Monday, Wednesday, and Friday is what they call a 0 days to expiration. And what this means is at the end of the day today, this SPX will cash settle. What that cash settling means is you cannot go long SPX or you cannot go short SPX. So let's say we had a short call at 37.50 and it closed at 37.59. Well, it'd be $9.12 out of the money. So it would cash settle for that amount. I don't know if that makes sense.
Come on.
All right, so here we are on January 6th. So what I like to do is there's a particular trade I like that has a 90% probability of profit. So imagine, if you will, that you're going into an Omaha game. And you know, every time you play, there's a 90% chance of you leaving with money.
Okay.
That's pretty good.
Great.
Now, the downside is those 10% chance that you lose 10 times what you risk.
Right.
Now, the weird thing is you could roll those losses into the next Omaha game, and you might have a 70% chance of winning that one. And if you do, you get all your money back that you lost.
Right.
Half of all those losses, you'll totally recover. 5%, which would be half of that 10%, the most you've ever lost in your lifetime was 80 times your initial investment. So it's a little bit of a math problem. So I'll show you kind of how I trade it, and then from there, but it kind of gives you a little bit of a Omaha analogy there. So let's look first over here. I use some signals that I subscribe to, and they can be expensive. It's like $200 a month, but it helps to improve my results significantly, so I pay for it. But let's look at here. Here's a 5 delta. 5 delta has a 10% chance of hitting this strike sometime during the day. It's got a 5% chance of closing out outside of this strike. So I'm going to click here on sell, and I'm going to do these 35 wide, 5, 10, 15, 20, 25, 30, 35. Okay. So in this case, I'm collecting 35 cents multiplied by 500, which is half of 350. It's 175 bucks I get to keep if it closes out of the money. So this takes about $3,500 in buying power for every option. So we now have 5 contracts, puts, and I'll go here and I'll find the same thing on calls. Here's a 5 delta call, sell, 5, 10, 15, 20. I'm only going to go 20 wide on this one because this one, after 20, it gets down to around 5 cents, which is as low as you can get. All right. So if I show you, let's see if that risk graph is going to, I don't think it shows when you do the simulation, the risk graph. So it's now, all right, I screwed up a little bit here in that it is 2 in the afternoon. I really wanted to start this at 8 a.m. So I'm going to reset it.
Okay.
I'm going to change this time to being when the market opens at 8:40 a.m. So now I'm going to do essentially the same thing. I'm going to look for a 5 delta. Here is the 3,700 strike. Sell 5, 10, 15, 20, 25, 30, 35. Buy 5 delta. Here's the 6 delta. Sell 5, 10, 15, 20, 25. Probably should have put them on separately, but we'll see what happens. All right, so there's our puts. And so what we did is we collected 35 cents for the calls, and we collected, 67 minus 28, 39 cents for the puts, and we collected 35 cents for the calls. All right, so if that all settles, 39 plus 35 times 500, if it all settles favorably, we'll get to keep $370.
That's at the end of the day.
At the end of the day. So really what you hope that this price does, and SPX is currently trading at 37.48. So what you hope it does is stays between 3,700 and 37.75.
Okay.
And it's currently trading at 37.50. 37.51.
Okay.
So what I do is in the morning, I just
now, is there a time limit that you have to keep this trade on?
Well, the market closes at 3 p.m.
3:30. Right.
Yeah.
But I mean, could you close it at noon if you were satisfied with your results and just said, hey, I want to get out now?
You could. So here's what I draw on my diagram. This right here is the current price. This is the call short price. This is the put short price. And then I calculate the difference. And I'm always changing that throughout the day to see how close it's getting. You could even draw some lines on your chart. All right, so now what I'm going to do, it is God, I don't know why this did this, but it's showing that it did it at 224.
Yeah, on the simulation, I don't know. We changed it.
All right, it's 8:40 a.m. on the 6th.
Right time now?
Right time. We're looking at the 5 delta puts, and they're 36.35. $5, $10, $15, $20, $25, $30, $35. Change this to 5.
Now that is going from, okay, and you're saying 35.
And now I'm going to look at the calls. 5 delta here. Sell. 5, 10, 15, 20, 25, 30, 35. Five.
Well, can you do those? Were those 2 separate trades, or was
those
that
are
all
2
in
separate
one?
trades? And in reality, I do them as separate trades.
Okay.
So right now we've got the 3770 calls, and we've got the 3635 puts. We got 40 cents for the puts, and we got 52 cents for the calls.
And from this, we're looking at, it's a little blurry on my end, so it's hard to see the number. Well, just a little bit, just because of screen share.
3770 on the calls and 3635 on the puts.
So that's the range we want to keep it in.
That's the range we want to keep it in. And you've got roughly a 90% probability of this being successful. Okay. And so it is 8:42 a.m. So now let's run it to just 10 o'clock and see what it looks like. And now I've put on my first 2 trades of the day, put spreads and call spreads. And typically my preferred width is 35 wide, which means you buy the wings 35 points wide. All right, so here we are. Let's see what the price is trading at now. 37.64. So, you know, it's getting closer to our call price. So it's only six points away from the call price, and it's 129 points away from our put price.
So can you want to put the the lines up there on our prices on the chart?
Sure. Now I don't know if it will continue to, let's see. Let's expand that. And we want to go 37.70. And 36.35, which is completely off the chart.
Yeah, it's completely off the grid right there.
So, I mean, I could go by and let's just leave that one on now. And let me show you the second trade I like to do. And the first trade is called 0 DTEs. And then this next one is called an iron fly, 37.65. So what I'm going to do is I'm going to do 5 contracts of this too. I'm going to sell the 37.65 put at the money.
Why are you doing that? Because of the 40E5 delta?
Well, this is a second type of trade. So that first type of trade is a 0 DTE, and I typically put in on around before 9 a.m. The second trade I do is at around 10 a.m. And I'm going to show you the second trade. 37.65. I'm going to sell the one at the money, both the calls and the puts. And I'm going to buy the 50-point wide wings, 5, 10, 15, 20, 25, 30, 35, 40, 45, 50. I'll buy this. 5, 10, 15, 20, 25, 30, 35, 40, 45, 50. I'll buy this. Do 5 contracts. And I'm going to collect $17.15.
Per contract.
Yes. Okay, it executed. And it executed at 17.29. So what I'll then do is I'll write on my notebook, iron fly. My short strike is at 37.65. And I collected $17.29. So then what I'll do is I'll calculate my break evens. I'll take 37.65 and add $17.29 to it. So my break even on the upside is 37.82.29. And my break even on the downside is 37.47.71. It's kind of like a pilot. I'm just calculating my altitude, and I know how high I can get before the oxygen runs out, and I know how low I can get before I hit the ground.
Okay.
To give you an analogy, those are my 2 break-even points. So I'm still fine there, but you know, that's when I will start to lose money, when it goes below that or when it goes above that.
Okay.
So here we are. And it's 10 a.m. and we've got our 2 trades on for the day. And now all we got to do is fly it and monitor them. Typically on this iron fly, my goal is to take a 12% profit. So 17.29 times 0.12 is $2.07. So let's say I'm trying to take $2 out of this guy. So let's say I want to take it off at 15. And then I take a 30% stop loss, almost 17.29, and multiply it by 0.3 is 5.187. So I'll add that to 17.29, and I'll say that I'm going to get out at 22.50. Okay, I'm going to take profits at 15. I'm going to get out at 22.50. Follow me?
Mm-hmm.
Okay. All right, so it's now 10 a.m. Let's click it to 11, see what she looks like. So what we really need is for the market to go down a little bit, but we might make some up on the fly because right now we're hitting up against too close to our call strikes for comfort. Let's see what happened. So here we are at 37.73. So wouldn't you know it, the first time I demonstrate this,
the 75 hit.
We breached the call strike. So what I'm going to do, I'll demonstrate the idea of rolling. Okay.
So did that close your position?
It didn't close it. We've just experienced a loss on that one. So what I'm going to do, I'm going to roll it to the next expiration cycle, see how far away I can get from the strike. So we've breached the 37.70 call. So what I'm going to do is I'm going to click on this trade and I'm going to roll it, see how far out in time I could roll. I'm going to roll it to the next expiration, January 8th. Let's see how far away we can get this. Let's see if we can roll it for a credit to 3,800. And we want to go 40 wide, 38, 40. $38, $45, $38, $50. All right, let's go a little bit. $37.95. All right, let's don't go quite as wide then. All right, we've breached our, oh man, we're now below the call price. 36,769. At one time we were above it, but since this time has passed. Okay. Well, I guess we're back above it now. 37.70. All right, so I'm going to roll this to the next expiration, expiring at 37.95. So it gives me another 25 points of cushion, right? So this price keeps changing. So we're collecting $1.65 credit. I don't know why it's telling me that.
I don't know. The simulation one is a little.
Yeah. All right. For the sake of this simulation, let's just close that breached trade at 37.70. Since it's not letting us roll it. All right, so now it's 11 a.m. We've closed the breach. Since it wouldn't let us roll it, let's just go to January 8th and try to put that same trade on 39.95. why it's showing me all these NAs.
Mm-hmm.
Yeah. All right. Let's punt that. Let's go and click it up to 12 o'clock noon. It's shooting up. We're now at 37.77. And let's see what this iron fly is worth. $16.95. We sold it for $17.29. Let's put a target price of 15 on there. All right, so it's now 12 o'clock. Let's crank it to 1 o'clock. So we've made 30 cents on our iron fly, which is not a lot, mainly because it shot up to that day.
Yeah.
You know, so boom, it's already at 19.47. So now we're losing money off that one. What a great day to demonstrate this. But we're not at our stop yet, so let's keep going. So let's make it 2 o'clock. 2:12. Okay, we got max profit. It must have shot down. Let's see what happened. Down to 37.61. And we made our profit, all of our profit back on that. So we closed it for 13.48. We collected 17.29. 17.29 minus 13.48 is 381 multiplied by 500. That day we made 19.05 on our iron fly, and we made full profit on our puts, which was 40 cents times 500. We made $200 on our puts, and we lost on our calls $36.50 minus 200. We lost $34.50 on our calls. So on a really tough day, you lost $13.45. But we had a breach. And if it would have allowed us to roll, potentially we could have got the roll back. All right, so now it's January 6th. Let's do it again on Friday the 8th. We'll change this to 8:40 a.m. So you kind of see how that went a little bit?
Yeah.
So you just went through kind of a 1-day cycle in 39 minutes, which would have taken you all day to kind of watch me do it for real. And so, you know, regularly and across all my accounts, of course, I have about 2.7 assets under management. But there's days where I'll make 12 grand every Monday, Wednesday, and Friday. There's days I'll make 26. I had a recovery of 60,000 on Friday. But that's from a roll, you know, so some of it was prior losses, which my poker analogy was, you know, rolling it all into the next day, you know, a couple times when you've got a 7 to 8 times loss. So let's say you bought in for 1,000 and now you're down 8, but you've rolled it into another day knowing that you got like a 70% chance of getting all that back.
Right.
And that's kind of what I did on Friday. Sometimes it doesn't work and you get really unlucky. And the worst I've had is an 80 times loss. So if you bought in for 1,000, you're lost 80,000, and you just kind of got to bite the bullet after it at some point where it gets.
At some point, you just got to get off that train.
You just got to get off that train. So here we are at the 8th. So we'll put this on here, the 8th, and it's 8:08 in the morning. So we need to make it. It's 8:42 in the morning. So it's a 0 DTE day on January 8th. Let me see what that was. January 8th, 2021 is a Friday. So let's go down and look at the 5 delta. Now, a person can go as high as 10 delta on these, but every time you do, you get hit more often. So on a high volatility, I prefer to go 5 deltas. So here I'm going to sell this guy 5, 10, 15, 20, 25, 30, 35 buy 5 contracts, 60 cents. $0.50 executed. So now we'll go over to the calls. 5 delta. Here's a 6 delta. Sell 5, 10, 15, 20, 25, 30, 35 buy 5 contracts. Okay, so now we've got them on. These are on for the 8th. So it's 8:40. So now we'll crank it up to 10 a.m. So let me just take the note of where we want it to stay between this time is we've got 37.60 and a 38.55. Right?
Yeah, I see the 38.55.
And it's currently trading at 38.17. Follow me? All right. So I would make those notes. And so here we are at 10 a.m. And I think we're in pretty good shape so far. Smooth flying. so far. So let's put on the iron fly at 10 a.m. It's trading at 38.18. So I'm going to round up to 38.20. An iron fly is where you sell both a put and a call at the money. And I'm going to buy the 50 wide wings, 5, 10, 15, 20, 25, 30, 35, 40, 45, 50. Buy. 5, 10, 15, 20, 25, 30, 35, 40, 45, 50. Buy. So we're going to do 5 contracts. This time we're collecting $14.47. You might say,
you got 4. Do 5.
You might say, well, why are we collecting less than last time? It's because volatility must have gone down. So let me show you VIX. VIX is 21.82. So 2 days ago, see, it was as high as 22, and now it's down to 21. And that explains why we're getting a little bit less credit. It's the one thing you can't predict is the amount of fear that's in the market. That's always changing. The perception of fear. It's in the market. Typically, when the market goes down, there's the fear index goes up. VIX has also been called the fear index. So $14.17. So I would then put on my paper an iron fly, and the short strikes were at 38.20, and I collected $14.17. So then I would calculate my break even on the upside. 38.20 plus 14.17 would be 38.34.17. That's when I start losing money on the upside. 38.20 minus 14.17, 38.05.83. That's when I start losing money on the downside.
Okay.
So now if I collected $14.17 and my profit target is 12%, I'm wanting to take $1.70 out of this. So I take $1.70 out of this, I'd take it off at $12.50. So let's just create an order right now to take it off at $12.50. So I'm going to create an opposite order, and I'm going to put in here $12.50. Now you need to be careful here. Okay, I double check it by taking $12.50 and multiplying it by 500 just to make sure that this says 62.50 before I execute it, because there's times where toss it'll change it before you execute it. So you know that carpenter's rule, measure twice, cut once.
Oh yeah.
So this is kind of where I just make a little audit. I make sure that that's the right number before I click send. And if it doesn't execute, then you go in here and you're doing kind of what you call, well, not here because I've got it in at 12.50. So it's now 10 a.m. So let's let this guy go to 11 a.m. and see what happens. The cool thing about this on demand is, you know, you can practice it and do it for 6 months and kind of get a feel of what you're doing and what the rules are.
Right.
Just kind of play around with it. So as you look at our net liquidation, we started out with 100,000. So we're down. So, all right, we got it, it closed. So we got our max profit out of our iron fly. So let's see what it closed at. 12.03. So we collected 14.17 and we took it off at 12.03. So we made $2.14 multiplied by 500 is we've already made 1,070 profit on our iron fly. All right. So, and let's see how we're doing on everything else. So SPX is currently trading at 38.06. 38.09. So we're in good shape on both the calls and the puts. So now let's crank it. It's 11 a.m. We'll make it 12 in the afternoon. Just kind of see how this is going hourly into the close. So our calls and our puts should be experiencing some theta decay. So they're worth less and less. There are people who will take them off. I personally don't. So now SPX is trading at 38.09. We're still well within, I think, our what we had 37.60 and 38.55, right?
Yeah, we're still good.
We're still good shape. So we'll take this now and turn it into 1 afternoon. Okay, here we are. It's at 38.09. All right, I don't know what happened, so let's change this to 13.105. So now SPX is trading at 37.99. You know, we're still in good shape, I think. So we'll take this. It's 1 o'clock. Let's take it to 2 o'clock. Okay, so now it's trading at 38.15. We're still in good shape. Let's take this now to right before close, 2:58.
Closing at 3 or 3:30?
That's 2:58.
No, I'm saying, does it close though? It closes at 3:30, right? Or is it 3 o'clock?
3 o'clock.
So would you sometimes wait till 2:58, or would you try to get out a little bit earlier?
Well, no, I let it just close worthless. Now we're on our put and our calls. We just hope that it expires worthless. And as long as it stays within that range, you keep the entire premium. So here we are. It's at 38.25. That's well within, right? It's well within our range. And so what I do is I just let this go to 3 o'clock, and this would all expire worthless. So what we did.
So you don't have to do anything. It just
you don't have to do anything. It just automatically cash settles for 0. And so what we did is we collected 40 cents. So at the end of the day, I'd go into my Excel spreadsheet, you know, which would look like this, you know, and I would calculate, you know, what all my performance was, right? So in this case, it was, we collected, 50 cents for the puts multiplied by 500. So we kept $250 for the puts, and we collected 47 cents for the calls. 0.47 multiplied by 500 is 235. So we made 1,070 on iron flies. We made 250 on the put spread, and we made 235 on the call spread. So we made a total of 1,555 for the day. Follow me?
Yeah.
And when I do that between all 10 of the accounts that I'm trading, you know, I'm regularly bringing in 16,000 every Monday, Wednesday, and Friday. between 12 to 16. And what I explained to you on Friday, that bringing in 60,000, it was a fluke, but it was a roll where I'm recovering some past losses.
Yeah.
So I showed you one losing day and one winning day. And even though I had that losing day, I'm still up $257, right?
Yeah. Right.
In 2 cycles. So for me to show you a sizable loser, and the second time I did it, I fully recovered everything plus made a profit.
Plus made a profit. Yeah.
So, and when you kind of learn to roll and you can get it back, it becomes not quite as scary. So I know you said an hour, and it's kind of been an hour now, but I think what I've demonstrated just in summary is a 0 DTE trade and an iron fly trade. And I'm doing those every Monday, Wednesday, and Friday. The 0 DTE, I'm selling a 35 wide 5 delta put spread, a 35 wide 5 delta call spread, you know, and collecting somewhere around 80 cents for both of those. And then at about 10 a.m., I'm putting on an iron fly, and I'm selling the put and the call at the money and buying the 50-point wide wings. My goal is to take it off at 12% or a stop loss of 30%. And ideally, you want to have that off by 1 o'clock in the afternoon. Why? Because this is kind of the Wall Street lunch hour trade. And you want the market just to kind of be stagnant while those guys are at lunch hour. When they come back from lunch and they're ready to trade again, you don't want to be
you don't know what's going to happen.
You don't know what's going to happen. They may take it up or down, or who knows, but you kind of hope that during the lunch hour, things are kind of smooth, unchanging.
Yeah, I've noticed that with the market. I mean, as soon as it opens, it goes crazy.
Mm-hmm.
And then it kind of winds down a little bit. Around 9 o'clock, it goes crazy again. And then after 10, though, it's kind of but then, like you said, right after lunch, here we go again. And then at the end, at the close of the day,
Exactly. That's why you want smooth sailing, 10 o'clock to 1 o'clock. And an iron fly, it does best when you're blue skies, relatively unchanging. Mm-hmm. I start getting nervous when it gets over $8 away from my short strike. And at that point, I'll start be willing to take less than 12%. I might take 5, I might take 10. You might be willing to get out for a scratch and feel like it was a win. So there's a few times where, like a poker game, a scratch ends up being a win because of how volatile something volatile happens. Yeah.
If you lose, $500, you go, that's a win.
That's a win. So, I'm always kind of monitoring price, and if it's trickling right around my short strike, I might gamble a little bit more than the 12%, right? It's kind of like blue skies, baby. Let's sail. Let's see how far that I can sail this thing before it kind of shows some variance, So I've taken as much as $3 or $4 out of a trade.
Monday, Wednesday, and Friday.
Yeah, those are all days that have 0 days to expiration. Not has as good a success trading Tuesdays and Thursdays, because those are considered 1 day to expiration. So, I know you like to day trade, and this is as close as I get to day trading, because there's no overnight risk on 0 DTEs. You're in them and you're out of them by the end of the day. But you can also, it's a high probability trade, which I like that. I I like the odds to be in my favor. And theta decay is on your side. You're forcing the market to beat you. And the probabilities are in your favor.
Do you think if more and more people did this same trade, that it would cause a problem in your results?
Theoretically. But the market is so huge, and I'm like a drop in that ocean,
right,
that I just can't imagine it getting big enough to affect
to make a difference.
Since I'm that drop in this ocean, and I think people, I can't imagine it ever getting big enough that there aren't there'll always be the Wall Street bet guys.
Oh yeah.
And there'll always be somebody at the poker table that's ready to gamble it up, as long as they're serving drinks and they're there. They're a weekend gambler. They don't make their money playing cards. There'll always be somebody that's there to have a good time and there to gamble it up. And just like in poker, I think we make our money off of gamblers.
Mm-hmm.
Same thing, a casino makes its money off gamblers. So that's kind of why I'm always an advocate of being in the high probability trade where theta is on your side.
Okay, I'm going to try these this week in my simulation account. You know what I mean? I'll do it. I'm going to put it on,
cool.
and that way I get more familiar with actually setting it up. I mean, I don't want to do it with real money because I may make a mistake. So I want to learn from that first.
Yeah. And so why don't you, let's get on Slack and I'll post the trades that I'm making. And if you want, you can just kind of shadow me on your paper trader.
Okay.
On the trades that I make, and I'll post it in our option coaching group on Slack.
Okay.
And, at the end of the day, we'll run a P&L just like it was real on what you would have made or lost on it. And we'll play around with it for a week or so.
That'll be interesting to do this week. I'll have, mornings are crazy for me, man. I got to figure out a way to have a little more time in the mornings. My days usually start at 8:30. Everybody starts calling at 8:30.
Okay. All right.
So,
do you have, and how long does it go typically? I mean, is it
about an hour?
Okay. So do you get any break at 9:30?
A little.
Okay. Well, if you get a little break at 9:30, put them on at 9:30 and then put your iron fly on immediately at 10, or put them all on at 10 if you got a break at 10.
Yeah, at 10, by 10 o'clock, I can miss some calls long enough to do this.
Okay.
Yeah. I don't know. I'm going to play.
And once you get kind of the system going, it might not take you, and especially since it's a paper trader, you could probably get all of it done in 15 minutes. So you get them all on. And because
that's what I'm thinking. I mean, I think I could place, because it doesn't take that long to place that trade, right?
Mm-hmm.
So I'm thinking, just let it go to voicemail. I can call them back in 5 or 10 minutes, right?
And if you want, and since it's a paper trade, you may decide you don't want to put the stop loss on at 30% loss. Just take the profits at 12. Then you can look at it at some point and go, I don't know, you could decide whether or not to take it off or not. Or you could read my Slack, and if I'm taking something off, you could just shadow me.
Yeah. Yeah, do that. I'll do that this Monday.
Cool. All right, buddy. And then what I do at the end of the day, the market will close at 3, and sometimes I'll start at 250. I've just decided that it's smooth sailing. They're not going to hit me in the next 10 minutes. Now, there have been times where I've been running my spreadsheet, counting my money, and then everything falls apart in the last 7 minutes.
Right.
They say you don't count your money while you're sitting at the table. I think there's a song that said that, right?
Absolutely. Kenny Rogers.
Kenny Rogers passed away recently. So I run my Excel spreadsheet. So I kind of have and then at the end of the day, I'll write what my P&L was, and I group them together, iron flies and 0 DTEs. And then, you may try, and I also love the diagonals. We've kind of run out of time, but my rolling put diagonal, I kind of demonstrated that in the boot camp. And I like that trade too.
Okay. Yeah, let's do it. I'm ready to try those. All I've been doing now is buying and just holding on, right?
I get it.
Or day trading. I'll buy and get 10 to 20 points, get out.
Yeah.
I mean, I've been doing the it's all volume, right? It's all on volume. We're watching the volume trades.
Yeah.
And if it's got enough people in there, I mean, this thing, it goes nuts.
Yeah. Well, the way you have been trading, it forces you to be right before you can make money.
Exactly.
Now, the cool thing about some of these trades, you don't have to barely be right. You just have to, the market, you just have
to got to stay within that range.
You just got to play the probabilities that are in your favor, and you're forcing the market to beat you.
Yeah.
You're basically going, all right, somebody's got to tweet something bad, or something is pretty bad's got to happen that's unexpected.
Yeah.
To make the market move that much.
I was wrong in an AMC trade one day, but I was also trading something like I said, well, if I trade this and and it goes wrong, then I'll just hang on to it till it comes back. Right.
Right.
Which is what happened. I traded it. It went wrong. I was down $1,000. I'm going, oh, hell. Yeah. But I just let it ride. Right. Just like cards, and let it ride. And then now I'm up $300.
Right.
So it took, 6 days, but
well,
it brings it right back.
That's kind of what selling naked puts will do for you. If you like the stock anyway, sell naked puts on it. If it ends up going down and you ended up owning it, no big deal, because you like the stock anyway. If you've got enough funds to take possession of it.
Right.
And each time you're collecting that premium, you're lowering your cost basis. So in essence, you're getting it at a bargain,
right.
or less than what you would have initially paid for it. So, well, do you feel like that? I know you weren't able to attend all the boot camps because you had some work obligation and stuff, but overall, kind of was that helpful to you?
Oh yeah, no, I did. I think I attended every boot.
Oh, you did? All right, you were.
Yeah, remember I was one of the ones.
Okay, well, you're the star student then.
Yeah, I attended them all, and it absolutely helps. Yeah, I've got a whole notebook of stuff that I wrote down. Well, I haven't done it with real money yet, but I'll practice some more on the simulation first.
Did you see where TJ took first place in one of those tournaments at Texas Card House?
No, I didn't.
Yeah, it wasn't a huge one, but it was a $10,000 guaranteed. And they chopped it 3 ways, but they played for like an extra amount or something. And he ended up taking first place. And
I didn't even know he was playing live.
There's a YouTube. I watched the final table.
Oh, really?
But yeah, if you want, I'll send you the YouTube.
Yeah, send me the link to YouTube on it, and I'll watch it.
He got lucky a few times, but to win first place, you almost have to get lucky. You have to
get lucky, man.
There's one time he check raised. He has King Jack suited, and he's got a flush draw and an overcard, and the other guy's got queens, and the queens are kind of really playing him passively. He did raise pre-flop. So queens raise pre-flop, King Jack calls, and TJ gets a flush draw with an overcard. And TJ checks, queens bets, TJ moves all in. I think there's one card to come.
Oh.
And queens calls. And he pinged a flush on the river and just stacked off queens. So there was that one where he got, but he played well.
So is a Hold'em tournament.
It's a Hold'em tournament.
And see, those Hold'em players don't get it. You're playing against an Omaha player. He's got a flush draw and an overcard draw, baby. He has got the world.
Yeah, those Omaha players, they're used to, drawing on every hand, right?
Yeah, you're drawing till the end. Every hand.
So it kind of made me want to play some tournaments. So
I want to too, man. I don't know.
All right, I'm going to go ahead and stop the recording now and wait, since we're just